Good morning, everyone. Paul Duncan here with GammaEdge. Today is March 15th. We are at about 8:30 in the morning, about an hour before the open. Let's get going. So taking a look here at the 1DTE structure, you can see there's really a huge dominance of puts that have been added or exist within the structures. Fairly important because as these puts are monetized, we could get a fairly significant rally to the upside due to dealer response, so just be aware of that. I will say we can still have a downward move. I think that's important, but big picture here, continue to see a lot of downside puts and relatively short-term expiry. These are all for the expiries tomorrow. And I think that's indicative of watch for a reversal to the upside, especially in light of the FOMC in the morning. The cumulative tick model clearly showing risk off. This is a reverse looking type of indicator. It is not predictive, but it does tell us where we are and perhaps where we're going. Circle 1 here, just terrible breadth. We had over 2,100 stocks hitting new 52-week lows yesterday. We cannot advance with any significance while this type of picture dominates. So going long here, you've got to be able to pick stocks that are bucking the trend, and your set of stocks is going to be very, very low. You can see here that coming up on about 1 o'clock or so, 1:15, institutions or the big money just started selling continuously into about 3 o'clock, 3:15. And this is telling us they're risk off, period. So if you're fighting the macro trend and trying to go long here, you're probably going to get chopped up pretty well. Circle 3 just shows us historically where we've been. You can see a noticeable downtrend just because of the strength, excuse me, the strength of yesterday's sell-off, and it's pulling all these moving averages down. Until we can get above this and stay above it for any length of time, do not have a lot of confidence in an upward moving market. It's worth noting here that the cumulative tick did not confirm moves up or attempted moves up in the SPX, and I think that's a really good indicator that you had some really good entries to get into when that divergence occurs. So we continue to see risk off. And if you're not looking at this model, you're probably getting chopped up and asking yourself why. From the ES perspective, a couple things are going on here, but I do want to note that the positive transition level that we watch has dropped. When that happens, that's usually a very good indicator over the longer haul. Over a 21-day forward look, historically we've seen the markets turn up. So just be aware that we are getting some indications of calls being added above spot price and or puts being closed above spot price, and that's usually a good indicator that we could be moving up. Also note here that we do have a declining VIX from when I took the snapshot this morning, and that too could add to the overall picture. When we take a look at historically, what does this positive trends dropping down mean for us? It typically means that there is a significant edge. We've got about 1,000 observations here, and over those 1,000 observations, the market has been up at least 1.2 to 1.9% with a fairly wide distribution. You can see the downside does have some selling there that or losses there that you need to be aware of. But in general, the middle, the 50 percentile here is on the positive side of the zero line. It's a fairly strong signal, fairly tight standard deviation. We like this, and so just be aware that although we can still continue down, it does indicate that there are some activities going on which could move us higher. Vol and the VIX, we continue to see volatility of the vol of volatility collapse of the VIX, but we are not seeing a corresponding move in the VIX, although you can see the range is getting tighter here, hence why we're seeing vol come down. We would like to see VIX drop below 30. If we can get that, I think we'll have some confidence to potentially go long. But for now, I'm going to color that yellow to red. We're still not there. I don't see a signal here that we can play on today. When we take a look at the SPX, both the PM settled here on the left and the combo, which is the AM plus PM settled. We are seeing a reduction here in the expected move. Again, this is the open high low close. This is a conservative value. I've got a note over here that you should probably read. We had some Discord discussion on this yesterday. And I still want to call out the 4,000 level is a tremendous line in the sand. We will not, most likely will not go down below this level, but I do want to put it on everybody's radar that if we do break that level, things could go south very, very quickly. I personally am using this level to sell some premium. On the 1 DTE, just showing here that this is a single expiration for the 316 day. Still net negative gamma, not very strong. And I think that's important. Key levels for tomorrow are still indicated to be 4,300 and 4,150. You can see there are some downside levels here that are going to roll off tomorrow. Net negative deltas across the board here, which are fairly significant. And I think the big picture here is that we need to continue to watch for monetization of the puts going into tomorrow and going into Friday to potentially have an upside move here. When we take a look at expiration, it's worth noting that this number is less negative. It's actually going towards a positive value, but it's still very negative, as you can see. That tells us that to a large extent we're actually seeing some of the net negative gamma go away, and that could be through the monetization of puts. We'll just have to wait and see, but you can see Friday obviously is a very, very dominant day, and we are expecting quite a bit of volatility and a movement between now and then. Finally, when we take a look at the combo complex, this again is the AM plus PM settled. Still very, very negative. It is improved from yesterday, but still quite dominant on the negative side. Key levels in the overall complex, the big complex, 4,350 and 4,100. We call those the goalposts. You can see a transition area up in this area. Still very, very deep away from that transition area, so we're going to have to move quite a bit in order to really rally up into this area. Not seeing it today. It's possible, of course. 2.9 would put us up in this area right into that transition zone, but still not seeing that at all. Of note here, we have had a significant increase in the short-term expiry for between now and Friday. It was 35% or so yesterday, and you can see now it's probably approaching 39 or 40%. So we are seeing a lot of folks stack up on this week's options, and that's worthy of note because the SPX combo is about a $6 trillion industry. And so if we're going to have 40% of that, that's about 2.5 trillion that has to get redistributed. That's a lot of money, and so we have to watch where that money goes. So that's it for today. Urge everyone to come over to GammaEdge.us. That'll take you to a Discord sign-up page. Once you complete that page, you'll be in for 14 days free trial, no risk. All the tools turned on. A lot of discussion going on. We've got a great group. Very active in the voice channels. We call out what we see. We debate each other, etc. Urge you to come and join us. Also follow us on GammaEdges on Twitter with an S. And of course, if you're watching this from YouTube, would appreciate someone always clicking the like button and leaving comments if you feel that this content is useful. Make it a great Tuesday, everyone. Thank you.